Hi trader, Tina here once again from ShortMeTina.com with my daily recap. We have a lot of grounds to cover in terms of analysis of stocks, so I will make it really quick. I hope everyone had a fun and enjoyable weekend. Today is Monday, which means it's the beginning of the trading week. What a way to start off the week, right? Last week was a bit crazy. Today we started off the day a bit crazy, and so before I get into the recap of the overall market, I want to do a few things. One, I want to welcome you. If this is your very first time tuning into a ShortMeTina video, drop us a comment, say hi, let me know your name, whatever it is that you want to say, just engage. I usually answer back. I want to say I always answer back. I always want to know that there are actually viewers behind, or real life people behind the viewership that I see, right? Also, if you're returning and you tune in every single day, I'm going to say you're family to me. How do they say? You are mi familia. I love it. Thank you so much. It means a lot to me. So a couple of things, again, before we recap the overall market. Last week, I posed this question for the first time. I got some stellar answers. I want to pose it again in the upcoming weeks. I want to say within the next 2 or 3 weeks, I will release a video answering that very question. But I want you to start thinking about it, because if you can get to the answer to this, I guarantee you it will revolutionize your trading. Trust me on this one. Trust me, it's the backbone of what I teach. It will revolutionize your trading. So the question is, what are the 3 pillars of successful trading? Comment below. Let me know what your thoughts are. So let's kick it off with the overall markets, the S&P 500. All right, so what you're looking at is the SPY, the S&P 500. 5-minute chart dating back to around March 2019, so about 2 months worth of data. I'm going to be cycling through the 5-minute chart and the daily chart. I generally do an analysis with the daily chart because I tend to look at bigger time frames, but I'm looking at the 5-minute chart just so I can show you more or less what's going on underneath the hood, so to speak. So the market, so today we are off about 2.5%, right? And that's so the last 2 weeks of trading, in particular last week leading into today, is a stark contrast, or it's a contrast, not necessarily stark, from what was going on, let's say, when the market was rallying and reaching all-time highs. It seems like such a long time ago, but it wasn't. It was really like the other day, the beginning of this month, where we just put in all-time highs with the SPY, right? Going as high as, what was that, 294.95, something like that. So if you're going crazy and you just don't know which direction to turn, I want to say 2 things. One, like one of my all-time favorite traders, Jesse Livermore, said, the stock market is never obvious. It is designed to fool most of the people most of the time. So if it's fooling you most of the times, chances are, well, that's what it's designed to do, right? So, but then it's important, right? And hence why I asked that question in the beginning of this video. That's super important, right? What are the 3 pillars of successful trading? So Mr. Livermore is saying that market is designed to fool most people most of the time, which is true. That's why you need to understand these 3 pillars. So that way you're not in the category of most of the people and you're not being fooled most of the time. At any rate, so what's going on with the SPY here? It's been sort of a theme where we gap down, rally, gap down, rally, gap down, rally, gap down, rally. And that more or less has gone on for the last, I want to say 5 to 6 out of the past 7 trading days. So again, sitting here, or we closed at 280.96. Am I super panicky? Am I worried? The honest answer is no, and here's why. So I'm gonna go back and let's rewind a bit with the chart. So we have the daily chart. So if you remember, and this might be new if this is your first time tuning in my opinion, the SPY has been cycling through a channel, or 2 points. It's been trading within a channel. The lower end here, 260, the upper end 280 to 282, right? So once it gets to 280 to 282, we have the sell-off, gets to 282, 280 to 282, we have the sell-off. So except for if you fast forward most recently to 2019, right, we actually ended up piercing through this resistance level, right? Then you saw the overshoot here. So 280 to 282, once resistance, a wall, we saw the wall here, we saw the wall here, we saw the wall here, we got knocked down here, we got knocked down here. Once resistance, and even here we got knocked down. It is now, or should, act as support. So sitting here at 280.99, 280.96, anywhere from 280 to 282, we are actually in support territory, meaning that folks should be stepping in to buy at this point if it is a solid level of support. So for us to know that, those levels have to be tested. If you listen to several videos that I've done in the past, I said for us to know whether or not this rally will be sustained, we need to pull back and retest that area that was once difficult for us. It was difficult here, difficult. Now we're retesting that area. For me, this should happen. This is good. So we're retesting 280 to 282 to see how strong it is. If we can sustain that, you have a nice bull market on your hands, right? Think we'll trend higher. If we dip too far below 280, if we cannot sustain that, if we cannot hold that up, if it does not act as support, then chances are we're going to take a trip back to 260. Do I think that's going to happen? I don't think so. So do I expect the markets to pull back a little bit more? Perhaps. I think max pain might be around 275 to 278, around there. If we pull back to that area, I think we still should be fine. Anything below that, the story gets a little bit difficult. Full disclosure, we do have a position in the S&P 500. Hope that makes sense. What else? All right, so the IWM daily chart didn't fare as well, right? Small caps usually get decimated when there's market uncertainty. So I'm going to be recapping a good deal of small cap stocks because they tend to get harmed the most when we have these sorts of pullbacks. Hence why you see that the IWM, the Russell, is off about a little over 3%. So we closed at 151.66. But even so, again, even with the IWM, we're coming into support. This is shorter term support dating back to February of 2019, denoted by that blue line. We can call that support area anywhere from 148 to 150. So far, we're holding it. Again, that should be the test. I think in my opinion, I think that the bulls will come in and save the day. So I can't see it dipping too far below 150, that 148 to 150 area. But time will tell. That's what I'm paying attention to. What else? And then we have ticker TRXC daily chart dating back to 2015. Off about 1.5% on the day. Closed at $1.27. Went as low as, what was the low today? 103. We got that bounce to close at 127. Crucial. If we can stay above 120, it's good. If we retest that 103 low of today and we break, chances are we will revisit around 60 cents. What else? And then we have Tesla off about 5% on the day. Not looking good. A lot of stocks are not looking good. So it broke support here of around 240. Remember, I did several videos and I said support comes at around 240 to 250. We got to support, let's say, around April. We bounced. Didn't quite bounce far enough. Then we retested it this time around. We broke. And I think that also has a lot to do with what's going on with the overall markets. Remember, overall markets first, individual stocks second. If the markets are tanking, chances are your individual stock will be tanking as well. So closed here at, pardon my dog, ironically named China. Do not ask me why my daughter named our dog China, but she did. Anyway, so closed at 227. If Tesla cannot get back above that 240 to 250 mark, I see further downside. Would not be surprised to see a print in the ones. Still think that it is a good longer term long. What else? And then we have ticker GSAT daily chart off about 5% on the day. Closed there at 65 cents. I still like the short-term setup. Pay attention to the most recent high around here of around, let's say, 70 to 75 cents. Anything above that, and I think that the stock potentially has a good run in it. What else? And then we have ticker VERI daily chart off about 5.8% on the day, closed at $6.90. Today's candle looks a bit like a doji. Not volume, but you have some buyers coming in. Overall, the 1-year chart looks relatively bullish in my opinion. I think potentially you're looking at a $10 to $14 stock based on the chart. So I would be paying attention to ticker VERY. I'm placing it on my watch list. Place it on yours. What else? All right, and then we have ticker ONCS off about 6.65% on the day. We closed at around 50 cents. The low of the day clocked in at around 50.50. So you know what I say, if a stock closes close to the low of the day, chances are the selling will continue into tomorrow. So pay attention to today's low. If the stock takes that out, meaning if it dips below there, then it can potentially revisit its most recent March lows of around 42 cents. So going into tomorrow, pay attention to today's low of around 50.50. What else? And then we have ticker HEAR off about 9.5% on the day, close to 10%, closed at $9.31. I've been bearish on ticker HEAR for a while. I want to say dating back to when the stock was trading, I want to say late last year, maybe even before that, when the stock was trading around here. The most recent video that I did, maybe 2 or 3 weeks ago, maybe less, maybe it was 2 weeks. The days tend to be just insanely crazy, but I got a lot of flack for this one because I said, well, chances are if we cannot penetrate above this support here of around, we can call that $12, more than likely the stock will fill this gap at $8.19. Again, we closed at $9.31. The low of the day clocks in at $9.27. When a stock closes close to the low of the day, chances are the selling will continue. If not the next trading day, into the week. So if we have another sell-off tomorrow, a more serious one, do not be surprised if ticker HEAR fills this gap at $8.19. It's looking like that scenario, bearish on this stock. What else? And then we have Snapchat, ticker SNAP, daily chart off about 3.6% on the day, closed at $10.11. Am I still long? Absolutely. Am I still bullish in the longer term? Absolutely. Am I still looking to add to my Snap position? Absolutely. Where did I leave off with Snap? The last video that I did, I said chances are there's 2 gaps to be filled. The one I wanted to add at comes in at around $7.05. The second gap to be filled comes in at around $10.06. The last video I did, I said more than likely. Hence why you should never, do you see why you should not chase stocks? Look at all these stocks just miraculously dropping. They're dropping at any rate. So I said the more likely scenario would be it would fill this gap of $10.06, and it did that today. We went as low as 10.04. The candle does not necessarily look nice. Granted, we had that bounce close to 10.11. Now it's a wait and see. Do I think we're going to get to fill this gap here? No, I don't think so, because that's a bit of a haircut. Like something really bad has to come out in terms of Snapchat fundamentals, in my opinion, for the stock to have such a major sell-off. But here, sitting here at 10.04, pretty close. We might get around $8 or $9. But am I still bullish on Snap in the long term? Like I said, absolutely. What else? Then we have ticker BPMX off about 2.3% on the day, closed at 124. That's equivalent pre-split to around 4 cents. So we're slightly under December lows of 5 cents. Do I like the chart? No. Do I like the stock? No. Do I want to get into it? No. But from a risk reward perspective, if you absolutely must trade a penny stock, then from a risk reward perspective, I think this is your best bet to go long here. What else? And then we have ticker UBER 5-minute chart off about 11% on the day. So I did a video on Friday and I indicated things did not look good. Said anything that if we dipped below Friday's low of around 41.09, things can get nasty. So we gapped down today, right? opened up in the 30s. And I say we, I'm not in this stock at all. We as in Uber, stock gap down. Again, off about 11% on the day, but for the most part, we traded sideways, I would say, the second half of the day, which tells me that the selling at this point perhaps is contained. Close at 37.14. Pay attention to today's low of around, we can say 36. Anything above there, I think you'll get your short-term pop and a potential gap fill of around $41.35. So still a bit of upside sitting here. What else? Then we have ticker LYFT daily chart. Just like every other stock today, it's off about 5.75%, north of 6%, closed at 48.15. So for me, levels that I'm paying attention to would be where the break took place of around, we can say, $55. Anything above that, and then chances are you're going to get to the upper end of this channel, which is 64 to 65 cents. I'll link somewhere in this description or in this video how to trade a channel. Super easy in my opinion. At any rate, so sitting here at 48.15, I'm paying attention to what was once support and now resistance of around we can say $55. Anything above that, and chances are you'll get a overshoot to 63. What else? And then we have ticker MARA up about 15% on the day, went as high as 385, ran into resistance, clear as night as day, pulled back, closed at 338. There's potentially more selling to be had for ticker MARA. However, I still think that it is a relatively bullish looking chart. So I'd be paying attention to resistance here of around $3 and let's say 85 cents, $4. Anything above there, I think that the stock can run. What else? And then we have ticker RIOT daily chart up about 10% on the day. Great, closed at 445, went as high as 488. Again, we pulled back. I'm paying attention to today's low. I don't particularly like the way the stock closed. I don't like the candle. The low of the day clocks in at around $4.26 heading into tomorrow. Pay attention to that. If we take out those lows, chances are we are going to revisit around $4 upper threes. Does that invalidate the chart? Absolutely not. From a shorter term, it's actually a relatively decent chart setup. What else? And let's round it out with ticker FIT, off about 2% on the day, closed at 492, hence why I never chase. It looks like it's approaching the bottom end of its channel, which comes in at around 450. If it reaches there, you might be able to get a bounce. So that's kind of it. Tina here once again from ShortMeTina.com. If you enjoyed any portion of this video, I'd like for you to do 3 things for me. 1, comment in the comment section. I posed a few questions. What are the 3 pillars, right? What are the 3 pillars of successful trading? Comment below. Let me know what you think. Secondly, I do videos like this Monday through Friday. If you want more ShortMeTina videos, definitely head on over to our YouTube channel at ShortMeTina and hit that subscribe button, turn on notifications. That way you're notified when I do a video. And lastly, I've been trading for over 15 years. If you think you can learn anything from this stock market veteran, then head on over to ShortMeTina.com, sign up, become a member. Thank you for listening, and as always, thank you for the support.